So let's go ahead and get this rolling. Okay. So first off, who am I? My name is Calvin O'Neill Russell Jr. I do apologize. I did not put my name up there. It's the least I could have did, right? um, I'm a certified FICO professional. And by the way, there's less than 4,000 of us nationwide. Okay. So there's a lot of people that may say to themselves, what is a FICO professional? Pretty much, it's really simple. What it is that Fair Isaac Incorporation, the company that actually makes the FICO score, they have a training session where they teach you, well, it's not everyone, but they teach you, through testing and things of that sort, how to understand how the credit score works, what makes it go up, what makes it goes down, and things of that sort. Of course, FICO, for those who don't know, it is the score that's used by 90% of lenders. Okay, so yeah, so 90% of lenders use the FICO score. And now, of course, you have a lot of other scores out there, Credit Karma, things of that sort. It's not that those scores are inaccurate. It's just that most lenders don't use them. It's not that those scores are not close to your FICO score. Again, that just means that no one uses them. Okay, so that's the only thing. All right. Of course, I am a Bankrate.com partner. Bankrate.com is one of the nation's largest websites that keeps up with the daily mortgage interest rate changes, credit card rate changes. Bankrate also owns creditcards.com, the largest website for credit cards and such. So a lot of people go to Bankrate.com for their calculators and things of that sort, which we'll go into a little bit later. Yeah. So, and then of course, Realtor.com. Realtor.com, I'm partnered with them, and pretty much what it is that I send certain clients, to them. Of course, the client knows about it, and just to make sure that they find the right person to help them find a home or an apartment. Okay. Now, this particular webinar is, of course, how to qualify for a home. Don't worry, I got plenty webinars coming up about cars, about apartments, student loans, all that type of stuff. So as long as you're following me, you'll most definitely, be in the loop. Okay. Now I put this in here, and me and my wife, we don't really talk too much about our personal business. When I say that, I say that to say we don't necessarily go into if we're buying a home and buying cars, all that type of stuff, and not to because I never want to make it seem like I'm bragging or boasting, but I do have something special coming in September. Just wait for that. But either way, but reason why I put this here, I purchased my first home / income property by age of 25, is not to brag or boast, anything like that, but you're getting information from someone who's done it. Okay. And I know a lot of people out there giving advice and they haven't done certain things. And, so I don't like to listen to people that's just giving theory, if that's okay to say. So you're listening to someone who's done it, and I'm going to show you guys how I did it and how you guys can do it too in less than 12 months. I'm a husband, I'm a father, and most of all, I'm dedicated to educate as many people possible, achieve their credit and financial goals. If that's okay with you guys. All right. So by the way, again, you guys can, the chat is live. At the bottom of this webinar, you're going to see where it's like this little blue thing. You just put in any name. You don't have to put your real name. You don't have to log in with Facebook or Twitter if you don't want to. You can just put any kind of name you want, and it's going to show whatever question is there. Okay. So, and I'll try my best to answer as many possible. You guys can also send emails. You guys can write questions on Facebook, whatever you guys want to do, and I'll try my best to answer them as much as possible. Keep in mind, you can also ask questions at the end of the webinar as well. Okay, so let's move forward. So now, what is GoSimplyPro? It's a certified credit consultation and repair company. I say consultation and repair because there are some people that only do consultation, where they just kind of just tell you what to do, and you pretty much do majority of the work yourself, because consultants, so a lot of times they give advice, but sometimes it's outdated advice. Sometimes, just so you guys know, FICO is now making the transition from the FICO 8 to the FICO 9. Technically, the FICO 9 has been out for quite some time, but a lot of lenders have not converted over to it. At my full-time job, we're still using the FICO 8. So a lot of people have not made the conversion yet. And the reason why I brought that up, because that gives you just a little bit, because sometimes people give advice and it's outdated advice. Okay. Also, that, as you can see, credit repair company. Let me tell you something. A lot of people have a negative connotation to what credit repair is. That's because so many people are trying to do illegal things. They're trying to do the old this is not my account jazz. Okay, this is not 2008, this is not 2003, it's 2016. These companies have better record keeping, so the old this is not my account does not work like it used to. And you can ask any of my clients, when we built their score, we built their score. It's an authentic score, and they know how they got there. And most of all, they know how to maintain what we just built. Okay, we've helped over 200 consumers improve their credit scores and reports. We've also helped clients qualify for auto loans, personal loans, and what you guys are here for today, home loans. The gentleman to the right is a real person, by the way. A lot of my clients, let me tell you something. I wish all my clients would let me talk about them as much as I want to, but at the same time, I understand their privacy, and I don't do it to boast on the company. I just want to show people that people have real results and that people are achieving goals that they have. You know, so this gentleman, not only, you know, did he buy a car and get a much better, you know, interest rate. By the way, he went from like some crazy like 30% interest rate down to like 7%. But now he just closed on his brand new home. And that makes me feel a certain type of way when I can help people, you know, achieve those types of goals. Okay. So step number one, do you have, number one, okay, first off, do you have your do you have your notepads ready and all that stuff, right? All right, so step number one, the first thing you want to do is you want to obtain your personal credit reports without a lender. Let me say that one more time. You want to obtain your personal credit reports without a lender. Okay, I hope I didn't say it that goofy, but the reason why I say without a lender, when you go to a lender and they run your credit, then that's what we call a hard inquiry. Okay, as you guys see, well, it says right here, going to a lender will resort into a hard inquiry. This means that your score will have a very small negative impact after 30 days. Okay, and sometimes depending on what you use to monitor your credit, okay, I don't have time to go into the credit monitoring, whether you use my FICO or Credit Karma, use something. Okay, but either way, you're going to see a negative impact. Here's another thing. It's a very small negative impact, but at the same time, it's not needed. Also, if you decide to change lenders down the line, a lot of lenders don't like to see that you used a previous lender. They're going to assume something did not go right. Okay. Now, just so you know, rate shopping. Okay, you guys can Google this. Rate shopping. FICO gives consumers 30 days to get as many hard inquiries in mortgage and auto loans only. Okay, what it does is it's technically giving the consumer time to rate shop without them having to worry about lowering their credit score. Okay, now keep in mind, your report will still show the increase, but they will only count as one inquiry. A lot of people don't know that. That's only with mortgage loans and auto loans. Okay, I'll give an example. Let's say you look for a mortgage loan. Let's say today's Monday, and you have, let's say, let's say you have 5 lenders look at it. Now, that does not mean that the lenders themselves may not have an issue with you going to so many different types of lenders. But now those lenders, everyone that ran your credit, of course, if you let them, is going to show up on your credit report. Now, if it shows up in your credit report, that does not mean it's going to affect your score. Okay. Now, there are a lot of different algorithms out there: Credit Karma, Privacy Guard, yada, yada, blah. But FICO, which 90% of lenders use, they will show it on your report, but as long as it's within a 30-day period, it will only affect your score as if one inquiry is there. A lot of people don't know that. That is updated information. Okay. So now another reason why you want to do it without a lender. Now it's going to cost you some money. Okay. We'll get to that in a little bit. So now, how do you get your FICO credit reports? Simple. You go to myfico.com and you want to purchase either the 3B Essentials, which is only $30 a month, okay, or each report one time, and that's $59.85 one time. Okay, so now the reason why you want to do that is if you want to see what your scores are. Okay, now here's the deal. because a lot of people, they don't know what type of scores that lenders look at. Okay, so first off, let's knock something out. On the right hand side, you got to see where it says where right above the arrows. Okay, it says commonly used in mortgage lending. All right, so when you buy a FICO score, okay, you get a certain amount of scores. You actually get 27 scores. There's 9 scores, okay, for each credit bureau, and you get one new score. That's the FICO 9. Okay, so total you get 28 different scores. Yes, I know what you're thinking. Why so many scores? Listen, I wrote a post on this. You can read it here on my blog. That's gosimplypro.com/blog. BLOG. Can't spell blog. All right, so, and you guys see right there where the arrows are. You see where it says commonly used in mortgage lending and where the arrow shows 682. As you can see where it says FICO score 4, that FICO score 4 is always used in mortgage lending, okay, for most lenders, okay. I have to use the word most, not all, for most lenders, okay. And now you must get what they call your middle score. We'll get to that in a second. Now, FICO is a score that 90% of lenders use to make a credit-based decision on consumers. The score that mortgage lenders look for is the FICO score 4, as I just mentioned. So in this example, what's the score? 682. This is not their overall FICO score. So, for example, some of you all have, let's say, a Chase credit card, a Citibank credit card, Discover, American Express, whatever, and they give you a free FICO score. Great, but that is your overall FICO score, not your mortgage lending score. How do you get that again? By signing up with my FICO. By the way, if you're not sure what, there's actually a link right under this webinar. You just click that. That takes you directly to, so there's no confusion. I'll try to make this as easy as possible. I hope I did. So right under that, there's a link that shows, it says, hey, what does it say? It says 90% of lenders use FICO scores. Get my FICO scores now. Yes, that is clickable. You can type that. You can get that later on. Okay, whatever, because I don't want you to get out of here and come back, whatever. Okay. So, but either way, that's what you want to do. All right. So now, this is what an example looks like for 3B Essentials. And the question that people always ask is, what is the middle score? Okay, so now the middle score is, I'll show you an example. All right, hope you guys can hear me okay. Okay, hope you guys can hear me okay. All right, so no one's complaining, so I guess you guys can hear me okay. All right, so I'll give an example. Now, when I was looking for my first home, I thought that they went by your average score. Why? Because I Googled something and someone said, oh yeah, they go by your average score. You guys know how Google is, right? Google, you can say your stomach hurts and Google says you're pregnant. You're like, wait, I'm a man. It says you're still pregnant, right? That's how Google is sometimes. So, but either way, I later found out that it's your middle score. Now, what's your middle score? Now, you're probably thinking the score in the middle, right? Well, in this case, no, because 631 would be the middle. No, so I don't want to confuse anybody. A middle score is when you take out the lowest, you take out the highest, and then they give you your middle score. So for example, you're going to see that 572 is the lowest, 631 is the highest. So your middle score would be 611 in this example. Okay. Once you purchase the 3B Essentials, now, by the way, you're going to see a lot of products, well, if you click the link below, it'll take you to where you need to be. The reason why you want to look at that, let me show you, I'm getting my mouse moving here, because there's 3 credit bureaus. This is the experience score for this particular client. This is the TransUnion score, and this is the Equifax score. Okay. So in this case, they're going to go by the middle score, which is the Equifax score. It doesn't matter which one it is. Okay. Because it could be the 611, could be the experience, whatever, it doesn't matter. They're going to go by whatever number is the middle score. Okay, so in this case, Equifax has a middle score of 611. Okay, now we're going to find out what score you need to get approved. All right, so now what type of score do you need? The score that is most common among lenders is a 620 middle score or higher. Okay, so there are some lenders that can get you approved with a lower score, but there will be some stipulations. Because there are some lenders that, well, FH, first off, we're going to, well, let me just finish reading. The easiest route to go is to simply get a 620. The score this score is, I put need, great. This score is needed for FHA home loan. Okay, I'll go into what FHA is very shortly. But either way, that's exactly what you need. Okay, now there are some lenders that will let you get, like, they will qualify you for a 580, you know, 590, whatever. It all depends on what type of lender you go with. There's so much gray area, so I wanted to go with the standard. Okay, because there are some lenders, there's a lot of lenders that will accept a 580 or 590, of course, with some type of stipulations and payment history and all that type of jazz. But this is something that is nationwide, because I know everyone's watching this webinar. So something that I know for a fact is going to be that 620 middle score or higher. Okay, all right. So now the other most popular loan is what they call a conventional loan. This approval is based on your score as well as the interest rate. I'm sorry, and the interest rate is based on the lender and how high your score is. With FHA, a 620 would normally get you the national daily rate, which changes every day. If you want to get an idea of what that rate is, this is where a lender would come in. You can also Google it through bankrate.com, or just type in, you know, daily mortgage rate, and it'll show you what the rate is. Right now, it's somewhere between 3.7 and 3.9. I don't check it that often. I just happened to check it just a few moments ago for the webinar purposes. Okay, so we'll break all of this stuff down as we move forward. Okay, so now step 2, you want to start saving up for a down payment. Okay, now I know what some of you guys are thinking. You didn't finish talking about credit. Don't worry, we're going to get to that in a hot second. Okay, but there are different people on this webinar. Some people, they qualify, but they don't meet all of the qualifications, meaning that their credit score is fine, but they may not have the money down just yet. Okay, so I'm going to touch all areas and then kind of hint on what I specialize in, which is helping people improve their credit score. So don't worry, it's coming up. Now, it's time to start saving for a down payment. That's step 2. Okay, if you're looking to go with an FHA, which is a Federal Housing Administration loan, okay, technically it's not really a loan itself. Technically, the Federal Housing Administration insures the loan. When you talk to a lender, they'll break this down a lot more. Okay, then they only require 3.5% of the purchase price. You know, okay, so now it says if you're looking to avoid the monthly PMI, then, oh, this is when I go into conventional. Actually, I typed this a little bit early. Okay, so now PMI, because I'm going to go into conventional shortly. Okay, so now PMI, private mortgage insurance. This is something a lot of people do not talk about. Okay, because they don't know, or they forget, or whatever. Okay, when you make a down payment of less than 20%, the lender will require private mortgage insurance, or the short-term PMI. The policy protects the lender from losing money if you end up in foreclosure, meaning you're not paying your mortgage. Okay, so if that's the case, then how do you avoid PMI? Well, you go with a conventional loan, but you're going to find out why a lot of people always go back to an FHA loan. Okay, let's break down a mortgage example really quickly before I break down a conventional loan. Okay, so, and the only reason why I'm going to spend a little more time on an FHA loan is because that's what a lot of lenders, I'm sorry, what a lot of consumers, especially first-time home buyers, this is the type of loan that they're going into. It is nothing wrong with the conventional. There's nothing wrong with the FHA. You have to decide based on your budget what's going to work best for you, and it's really going to ultimately come down to your down payment most of the time. Okay, so these are real numbers, by the way. For those of you who follow my post on Facebook, actually this was on my personal page. I completely forgot why I didn't post this on the business page, but it's okay. But this is a real example. Okay, this is a house here in Illinois. I forgot where it's at, but it's on my Facebook page. But either way, the cost of this home is $130,000. Okay, and the taxes on this home is $2,594. Now that's annual. Okay, now by the way, when you're buying a house, you can pay the taxes twice a year, or you can put them in what they call your escrow account, which means that it actually you pay it monthly. Okay, so to keep numbers simple, I'm just going to go ahead and put everything, assuming that everything's a monthly payment. Okay, Because to me, I mean, I think that's what everyone does, but some people, they don't do it that way. But I think it's easier, but hey, everyone's different. So insurance, let's say it's $100 a month. This is an estimate. Insurance, I mean, you can get whatever you're looking for, as much coverage as you want. $150 a month, $75 a month. All depends on, what type of the minimum coverage you're looking to get for, for you and your home, depending on if it's a flood zone, depending on if you are a veteran, depending on, so that's completely separate from this. Insurance has nothing to do with the loan itself, I should say, where it's all based on the coverage that you want on the home. Okay. So now, and then of course, the PMI for this example would be $83.63. Now, I'm going to show you the easiest way to calculate PMI. That's going to be extremely close. Just to keep the math simple, don't worry, there's an app for that. So we'll get to that shortly. Okay. So if you're going FHA, your down payment would only be $4,550. Okay. All right. So now that's a pretty, affordable down payment, right? Depends on, how your finances look and all that jazz. Okay. So now this would result in a monthly payment of $946.46 a month. This includes taxes, okay, which is divided into 12, insurance, okay, which is $100 a month, and of course your PMI, which is $83.63 a month. Now, I know what you're thinking. There are some people, it may even be you, that's paying $1,000 a month for rent, $1,200 a month for rent, $1,500 a month for rent, right? Now, here's the difference, is that let's say you rent that place for 30 years. You still won't own it. Now, but this mortgage, you can own this, okay? And now a lot of people say, well, I don't want to have to pay that long for something. No problem. You won't own anything. Okay, because it's not about just necessarily ownership. Sometimes people just want to own the home that they grew up in, because no one lives forever. So think about the house, think about your grandmother's house, think about your grandfather's house. What's going to happen to that house? And then you now look into the next wave of, let's say, baby boomers, people that was born like 1950s and such. A lot of them ended up buying or ended up selling their parents' homes because someone owned it. Okay, so I mean, this is why you guys are here, to learn how to purchase a home, regardless of what you do with it down the line. I mean, you're gonna own it. And here's the best part: because it doesn't have to be 30 years, it can be 15 years. There's a lot of different loan terms, but you're gonna own it, which means that you'll be saving living expense. I want you to think about something. What's the biggest expense you pay? Living expense. Okay, imagine not having to pay rent. I'm not talking about living with your mom and dad. Okay, by the way, I'm not knocking anybody that lives with their parents or lives with some family, whatever. I'm not knocking that. But I'm saying, what if you could stay somewhere that's yours and you don't have to pay for something? That's what could happen for you in 15 years from now, 30 years from now. Okay, let's move forward. How much will you need to put down? This depends on how much house you're trying to purchase and what type of loan you're trying to go with. As I mentioned before, FHA requires 3.5% down. Now we bring up conventional again. Conventional requires 20% down payment. Some lenders will accept a 5% and a 10% conventional. But now we bring our old friend up, PMI, because it will result in a monthly PMI because you have a lower down payment. Again, PMI will always pop up, okay, anytime you put down less than 20%. Okay, now you're probably like, who in the world puts down 20%? Well, a lot of people. FHA hasn't always been out. Okay, so I think it started like in the 70s or something. So but either way, then you have some people that they get gifts and they save their money up, or what, they get a bonus or whatever, and they just put 20% down. Okay, but as you can see, PMI is not that big of a deal. But some people say, why pay it? Some people say, well, I don't want to pay it. Again, this is where you have to decide on your own. Okay, now this is something that I used when I was looking for my home. Okay, and you download the Quicken Mortgage Calculator app, okay, to help decide how much house you want and mainly how much you can afford. Okay, now I chose this app because there's a lot of, I don't care what app you use. This is just something that I used. Okay, you can use whatever you want. Unfortunately, this is like free promotion to them, and I know a lot of people are watching this webinar. But at the same time, who cares? So by the way, Quicken Loans is the #1 mortgage lender. You can Google it, whatever. I think mainly because everything they do is like over the phone and online and stuff. But you can go with whoever you want to go with. That is not why I went with them. I just Googled it. I'm sorry. I just kind of searched for something like a mortgage calculator. I'm sorry, mortgage calculator app, and they popped up first. So I used them. I was familiar with the name. I was familiar with the brand. That's it. They just got like a lot of free promotion, right? Let's move on. I'm gonna have to have them send me a check or something. All right. This is a real example. This is another example. This was actually, I didn't put this on Facebook. I don't know why. Well, actually, these numbers come, technically they are on Facebook. The reason why I bring up Facebook is because there's another home I posted about, I believe today, and this morning, well, this like afternoon or whatever, and these numbers came from that, okay? So it's really simple how to use the app, okay? So you just put in the purchase price, okay? And this example is 159,900, which is $159,900, and I put 3.5%. Okay, then I put, now the interest rate, you don't have to mess with that. That actually automatically updates based on the daily rates, which changes every day. Okay, so, and I think one loan officer told me sometimes it changes every hour. Again, I'm not a lender. Again, you can't change the rate. So all right. So either way, now this is based on 30 years. I only put 30 years because people like to see low payments. If you want the lowest payment possible, you're going to be looking for 30 years. Okay. So annual taxes. Of course, this is the annual taxes. All this information, when you use realtor.com or whatever, you're going to see what those taxes are for the place. And most of the time, the taxes are going to be estimated the last time that someone did a report on it. And sometimes it's from 2013, 14, 15, whatever. But it's going to be very close to whatever the number is. So for this example, on this house, when I went to realtor.com, this is where the taxes were on this particular property. And then I put in the annual insurance. I put 1,000. I should have maybe put 1,200, but everything's different. Some people pay 900, 700, 800, whatever. But I use another, again, just an easy number. Okay. So as you can see, the monthly payment at the top, you see the monthly payment is $1,142.48. This is on the picture to the left, by the way. Okay. If you move to the photo to the right, you're going to notice, because actually to get to the photo to the right, there's a little arrow pointing down at the bottom. Okay. And let's see here. And when you tap that, it's going to then recalculate the payment if it includes the PMI. Okay. The mortgage insurance. That's what it says, FHA-MI mortgage insurance. And based on this, on these numbers, again, this is a completely different example of what you just saw. Okay. Different house. That's why the mortgage insurance on this one is $102.87. So that gives you $1,245.35. That's your monthly payment if you're going FHA, which in this case you would have to, because the down payment is 3.5%. If you put down 20%, there is no PMI. Okay. Hope this isn't a lot of numbers, but that's why a lot of people don't buy houses, because they don't feel like doing numbers. Basic things. Basic. Okay. So now step 3. You need to, assuming that you don't have the best credit, or you may not necessarily be where you want to be, you need to improve your score to get approved for FHA or conventional. So you want to make sure that you meet those qualifications. This kind of piggybacks off of step 1. Once you've gotten your reports, notice I haven't said really go to a lender yet, okay? Because a lot of the stuff you can do prior to. A lot of times I see a lot of my, I won't say a lot of my clients, but I see I have a few clients that I'll see their reports, and I'm thinking like, why in the world did they try to get a mortgage? Because they had no idea that they would not qualify for it. And that's what webinars are like this. You're going to all of these places thinking they're just denying you for no reason, and you don't meet the qualifications. And you're wasting your time. You're wasting the lender's time. You're getting your credit ran and all this other stuff for no reason. And you may not meet the qualifications. So, and if you've ran your credit, and I'm sorry, if you pulled your own report from my FICO and you see that your mortgage score 4, that your mortgage FICO score 4 is not a 620 middle score or higher, then you need to improve your score. Or if you're looking to go conventional and you have a 630 or 640, whatever, because conventional is based on your score itself, which means that the higher your score, the better the rate you're going to get. Okay. Or you can go simply with FHA. You'll be at 620, and you're going to get 9 times out of 10, you're going to get the daily rate. But there are some lenders that have fees and all this other stuff. So, but either way, we'll keep everything simple. Now, You can do this. Now you can improve your score by yourself by researching and talking with previous homeowners and people that have great credit. But here's the problem is that FICO changes their algorithm from time to time. The FICO score has been out since the early 80s. Okay. So some advice may be outdated. Also, everyone has different credit reports and scores. I once heard a person with phenomenal credit give bad advice. They said something like, well, you must carry a balance on your credit card to build credit. Now, I don't know if that was true prior to 1988, because that's when I was born. But either way, that's bad information. But they have great credit. So they don't mean any harm. They're just giving bad advice. Okay. You can also seek the advice of an expert. I wonder who could that be, right? Well, it could be us, all right, or it could be me. I am a certified FICO professional, as I alluded to earlier. Don't worry, some of you guys are probably like, you're just promoting your company. No, just letting you know that if you don't have the best score, that we can help get you there, okay? You know what? Photos always trump text. So I know you guys are probably looking at the photo to the right. So I'll go ahead and explain the photo to the right. This is actually the company record, by the way, in the shortest time frame with the biggest jumps. So as you guys can see, in March, this client was a 597. In May, she was a 632. In June, she was a 701. In September, she was a 752. I believe by October, November, maybe, she was a 770. And I wish I still had the message. She said, I have no idea why it's still going up, but I'm not complaining. It was something to that. So, by the way, I had to watermark this because I used to post my client success stories on, I'm not really a big Instagram user, but I know some people, that's their social media of choice or whatever you use. And I posted one of my photos of my client success, and I used the hashtag credit or something. And I went back like a week later, and I saw one of my client success stories on someone else's site. So I was like, wow, the people steal your photos. I had no idea. So either way, I started to start watermarking and stuff. Either way, so you guys can see that this is real, by the way, and you guys are more than welcome to see other testimonials. If you're interested in seeing any testimonials, you can go to www.gosimplypro.com/testimonials. Okay. So now, up-to-date credit monitoring. Okay, I'm sorry. Oh, wait, hold on a second. Okay, hold on. I think I got a question here. I did. Okay, let me check this out really quickly. Oh, okay, I just answered that. Okay, perfect. All right. So now, clients average 25 to 30 points. Well, I'm sorry, my clients are averaging 25 to 30 points points increase per month. Of course, we have up-to-date credit knowledge because of course, I always get the updated information directly from Fair Isaac Corporation. One of our biggest differences, though, is that we not only help our clients by repairing their report. And by the way, everything we do is legal, okay? Otherwise, I'll lose my certification, okay? But it's not just repair. A lot of people, they're just focused on repair. Let me break this down for a second. Here's the deal. You can spend all day trying to get items removed from your credit report, and you're going to notice that your score won't improve dramatically, okay? I remember I had one client, potential client, and this, I have a lot of people always ask me. I mean, if I said yes to everything, then a lot of people would, if I was just doing it for the money, I should say, then I would take on just every client. But I want to make sure that my clients' expectations are set properly before they pay me. And when you're just looking to just remove items, number one, everything can't be removed. And technically, it's not me removing it. It's the credit bureaus, it's the creditors. It's a process, okay? It doesn't just, I don't just wave a magic wand and things just go away, okay? But people spend so much time trying to get items removed, and they find out that it's all the time that they spent trying to do it, especially when they do it themselves. Oh my God! And they see little results, and that's why it's not all about removing items, okay? That's where that's where I come in. I've met a lot of people, I'm not gonna say any company's names, what I would say companies that are much bigger than me, okay? And they just focus just on credit repair, just focusing on removing items. And they charge people you know, you may know who it is now. So $89 a month, $69 a month, whatever they're charging them per month, by the way, to so-called remove these items, and their score barely even moves, right? But guess what? That client is still not educated on how to increase their credit score, if their credit score has increased at all. I had one client, he had this particular company, he was paying them, let's say $89 a month. Let's just round it up to 100. He was paying them up to $100 a month for a year, and his score only went up like 30 points. So that's $1,200 for 30 points. That's horrible. He should get a refund, right? But either way, I show my clients how to increase their scores, as you guys can see clearly, and how to maintain what they just built. That's the most important. Otherwise, you're going to be seeing me again. And it's rare. I have like less than 5 clients that have messed things up in the past, and for whatever reason. And but for the most part, about 95% of my clients know how to maintain their score. Okay, over 200 clients served nationwide, affordable prices and payment plans, proven results, updated daily. All right, quick ways to improve your score. If you're still with me, I sure hope so. Okay, here's the deal. It's not necessarily rocket science. Granted, everyone's situation is going to be different. Okay, but you want to make sure that things are lined up a certain way. Okay, so number one, the first thing that you can do, like right away, is lower your credit card balances down to 0 to 7%. Okay. Now, consumers that have credit scores of 780 or higher have this amount of usage. Okay, which means that either not using your card at all or barely using it. That's the problem. A lot of people max out their credit cards. Okay. This also improves your credit score with results in a few months. Keep in mind, results in a few months. Again, this is not going to take you up 100 points, but this will put you in the right direction. If you want to improve your score 100 points, you may need to seek the advice of an expert. Okay. So now, if you don't have any credit cards, it may be time you get one. Okay. I know a lot of people say, well, you know, my parents told me not to get a credit card. Credit's bad. You know, I listen to Dave Ramsey, all the rest of this stuff, right? Here's the deal. I'm a huge Dave Ramsey advocate. Okay. By the way, everyone that's on this webinar, if you haven't gotten it already, I'm going to send you guys the Dave Ramsey auto Excel budget sheet. That budget sheet, by the way, it helped me pay off 100% of my student loans. Yes, 100%. I'm student loan free. Right. All right. So, and I'm not bragging or boasting. I'm just letting you guys know that, because a lot of people, there's a lot of saying out there and people are not doing what they're saying. But, you know, and I want to let you know, I've been there before. I know how you feel. So I'm telling you, we're making it happen. Okay. And the company is, I should say. So, but either way, I say that to say that if you're going to go the old no credit route, be prepared to pay cash for a home, which you can do. You most definitely can save up whatever you need to save up to get the house of your dreams. Now, I'm not knocking that. Okay. But since life is short, I mean, it's a part of life to make sure that your credit is right. You don't have, just because, let me tell you something. People that pay their bills on time, I promise you they have a great credit score. So even people that are not advocates of credit, I promise you they have a great credit score, because there are some employers that look at credit scores. To rent a car, you must have a certain type of credit score. To get an apartment, you need a credit score, or you're going to need someone to co-sign for you every single time. What if the co-signer dies? You can't keep using them. Okay. So either way, the problem is with credit cards that a lot of people go to the wrong bank. As you see here, you must go to the right bank. Consumers apply at the wrong banks all the time to get denied. This bank may even be the bank you have your checking account at, and they still deny you because you don't qualify. So what type of credit card should you get? You may need to seek the advice of an expert. I'm not just trying to lead you guys into my services. I'm not trying to, by the way. But no, honestly, because everyone's credit score is different. And that's why they be with certain banks, okay? And a lot of people apply for the wrong card. I can't just say one card and everyone apply for it, because some people may get denied for it, okay? So that's why I can't really do that, okay? Step 4, choose a lender that would best fit your needs. Most consumers normally go where their money goes. That's whomever they bank with, okay? This is a lender for the home, by the way, okay? This route is easier because they see your money every time you get paid, and this reduces the amount of paperwork from showing proof of income, how long you've been on the job, and how much you make, and all this other stuff, right? Okay. Now, some consumers research mortgage lenders online and locally. I did this for a while, but then I ended up just going with someone that I knew was just going to work out for me. And but either way, so that's one way you could do it. This also is where you find out exactly what your debt to income ratio is, as most lenders will require a debt to income of 43% or lower. Okay. Some lenders do have more flexibility than others. Okay. Now, debt to income ratio. Some of you guys are like, what's that? All you have to do is add up your monthly debt obligations, not a cell phone bill. Okay. Not even a gas bill, things that are debt. Okay. A cell phone bill is not technically debt because you're using it month to month. Debt is like, credit cards, auto loan, student loan. Okay. Often called recurring debt, but sometimes it's recurring debt because you also have auto loans. Yeah, it's recurring payments, but it's technically an installment loan. But that's a whole, again, when you talk to a credit expert, they break that down to you. So including your rent too. Now, granted, rent is technically, it depends though. Some lenders go into this and not. I mean, I think you should count it, because that's something that you're paying every single month. Okay, but either way, car loans, student loans, your monthly payments on any credit card debt or any loans that you may have. Then divide that number by your gross monthly income. Some people have no idea what gross monthly income is. Gross income is your income before taxes. By the way, side note, I had no idea myself. Okay, so but yeah, gross income is your income before taxes. Again, this is something that you don't necessarily have to do on your own. When you go to a lender, after you follow step 1, 2, and 3, they'll go ahead and let you know what your DTI is anyway. Okay, how to reduce your DTI. The easiest way is to pay down your credit card balances. Doing this will lower your monthly credit card payments until you bring the balance down to zero. There's an old myth that you must carry a balance each month to build credit with your credit cards. As I mentioned before, a lot of people may not, maybe still giving out that old, outdated advice, okay? Because that's not the case with a lot of places, okay? I mean, that's not the case anymore with a lot of lenders and such. People don't use that information anymore. Okay, so if your budget allows, so that's the first thing you want to do is bring down your credit card balances to zero. Okay, there is also okay, let me break this down. Hold on one second. Okay, if your budget allows you to do so, I also recommend that you start to pay extra on your auto loans or any loans if you have one. This doesn't just have to be on your auto loans. It could be on your credit card monthly payments, whatever you have. But if you have a loan out on something, whatever you're paying a monthly payment on, you can always pay extra on it. Okay. Most consumers don't realize that auto loan payments are minimum payments as well, just like credit cards. And most lenders won't charge you an early payoff penalty. Okay. And the reason why I say do this is because this reduces your overall debt to income. Okay. If your budget, another typo. If your budget allows you to do so, I also recommend paying monthly on your student loans and sending back your refund check. Don't worry, I wrote a blog post on this. A lot of people, I got a lot of slack for it too. Here's the deal. I'm just going to break this down very quickly with refund checks. If you're still getting them, please give them back. Let's do some quick math. If the average refund check is $2,000, you graduate on time, right? You get a refund check every semester. You graduate on time, that's 8 semesters. That's $2,000 times 8. That's $16,000. Who do you know right now that would not like or would not want a $16,000 student loan reduction? Thank you. Have a nice day. Okay, so, but no one taught us this. We thought it was smart to pay up our rent. We thought it was smart to buy a laptop. We thought it was smart to, just do whatever, right? No, it's not your money. Technically, you took it out, but it's not your money, okay? And that just makes everything more difficult. This makes things more difficult to get homes and things of that sort because of student loans and things of that sort. But don't worry, lenders are out there. They most definitely can approve you, but this, that's where income's going to come into play, okay? All right, so now we'll move forward. Personal step-by-step coaching. GOSIMPLYPRO has helped over 9 clients purchase and close on homes, and many more are qualified to purchase when they're ready to do so. Okay, these are people that I literally walked through the process, answered any questions I possibly could. I know that some of you guys like 9 people, that's it. Well, again, I'm not a lender, but here's the deal. A lot of people just say, hey, I just bought a house, but how many people are showing others how to do the same? Okay, now, and I'm not saying just because some people don't want people in their businesses, and I'm sure people will answer questions. And if you have friends and family, things of that sort, absolutely. But for a company to do that, that's not a lender, I mean, it's hard to find someone like us. And I'm trying to be different in a way where people can, you know, they can use us for everything. It's not just about having a higher credit score. It's about understanding your power now to do these types of things. And we're not just adding debt, by the way. You know, so as a matter of fact, most of my clients will tell you that you know, we're not buying unnecessary items. I see a lot of people in this industry, they're telling people to buy things and open up accounts and all this other stuff that's not needed to build credit. That's insane. But they don't know, because people don't know what they don't know. Okay, we can help you regardless of your situation or your credit score, so you can have the home you deserve. And we have something special for you. Yes, you, the viewer. Okay, a special discounted rate by email. So only if you pre-registered for this. By the way, you still can register and get the discounted rate. So if you have friends and family that were not here, I will honor that rate. Of course, that will only be until the end of the week, until Friday. So that will expire. As a token of our appreciation, we'll give you a special discounted rate. Check your email at 10:30 Central Time. Let's see what time it is right now. So in about, I say this about 40 minutes, okay? You're gonna get an email with your promo code, okay? Thank you guys so much for watching this webinar. I hope I got everything that you answered as much as you guys wanted me to answer. Let me just double check and see if there's any additional questions that I did not answer. Give me a moment here. Let's see here. I do not see anything, okay? And I'm checking the Facebook page right now. I've got, okay, I just want to make sure I answered all of the questions. I don't want anyone to feel like they've been left out by any means, okay? And it looks like we are all good and all set to go, okay? So if anyone has any questions, comments, or concerns, and you're, and you did not get a chance to answer anything, to answer the questions, you can most definitely, ask me, send me an email or whatever. I'll be more than happy to, to answer those questions for you guys. So please let me know. And thank you guys so much for being on this webinar. Take care. Have a great night. And please take advantage of that special discounted rate. Have a great night, guys.